Good weekend all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the weekend of Friday, the 24th of March, 2023. Well, what a week it is. You know, I'm worn out. I really need it. I need a good night's sleep. Going to go see John Wick tomorrow. And the weather's supposed to be a little wintry here. And then, you know, we're still at the end of March. It's going to get nice very soon. But we wake up this morning, we hear about Deutsche Bank, don't quite know what it means, but all of a sudden there's an unscheduled meeting taking place between Janet Yellen, Jerome Powell, and I'm sure the head of the FDIC, everybody that's got a position in some regulatory part of the banking. And I'm sure they came together and they dotted their I's, crossed their T's. If this spreads, what do we do with the contagion? Where are we? This isn't going away anytime soon. It's as though analysts are looking at every stone, picking it up. They see a worm. We got another one. And away it goes. Today was a relief day, no question. Going into the end of the week and people are going, I'll take some money off the table. So you got a stock market rally, gold down $11. The dollar rebounds a little bit on it. Bonds and notes, didn't do much. Finally, soybeans gave a rally. It isn't much, to be honest, all right? I don't know if you've watched how much it has dropped. And the price of meat. So when we hear that food inflation's there, I want to share something. I'm a commodity trader. It's not true. You're getting a number of markets that have either stalled out or coming down. Very few, you can say, are going up and making highs in this move. Not going on. Including the energy market, where jumping Joe Biden really blew it. Doesn't even tell us about it. Ran to Canada to hide. But here's the reality of the situation. We're not buying the oil that he told us we were going to buy. They did take bids for it, from what I understand, back in January, December. They didn't like the bids. And now they're going to go ahead and sell another 26 million barrels. Well, Joe, I'm not with your Harvard, your Princeton guys. I'm just another guy on the street. But here's what I would do. You can buy that 26 million barrels. Do what's called a wash sale. Take it out with the left hand, put it back in with the right hand. Don't let it go anywhere. Do the paper transfer, and you're not removing that oil from our SPR. Why not? Whether it's our oil that goes out there and we bring it back on a truck and put it back in, it's the same thing. Do it. Don't give me this nonsense either about, two of the caves where we store oil, they're under maintenance. So what? We've got other caves. So, politicians, you got to hate them. All right, on the S&P index, when I look at the market coming through here, just take a look at where you're at. You're still staying under all this, so you have a general downside bias. When you're over the red number, I have an upside bias, under it a downside. Now, one of the things I was sharing with you for a while was this. We had dropped down pretty good. This is 2 weeks ago, the 10th. And I said, we're down. Now, if you rally, it's often that you go back to the 18-week average. What's the number I wouldn't want to see taken out? Know it? It'll be the week before. This high of 40.4975. So the market comes down the week of the 10th. Last week it starts a rally. And believe it or not, you were up this week 1.12%. I know it doesn't feel like it. To me it doesn't. But you were up 44 points, and you're just sort of hanging here. At this point, you can say that you've got the pattern of lower highs, lower lows. There is upside bias going home since the market closed over 39.90.75. When we look at the weekly chart action, you can see that you have lower highs, lower lows. On this chart, if you took out 40.8250, you negate the downtrend. Where's the market hanging? I think you'd agree with me. Right in the center here, hasn't gone very far, up or down. It doesn't feel like that when you're a broker and you're watching what your clients are doing. You're going, oh my God, they're either making, they're getting killed. Who knows which way they're going at any point. In terms of Bollinger Bands, they are going sideways. So the Bollinger Bands have now changed their pattern on you. Now they are saying if you rally, there's big resistance, 41.67, and if you break again, right where we were at 38.14.5, there's a lot of support. 95% of the time you'll stay within them, and when You give a sideways action, it's much more common to stay within them than not. And the narrower that gets, the more churn you get in the market. It's very different than when you got these big, broad swings, you know, and you're looking at it. I guess you could say at all times the market's got an upper and lower band. You can say they're sideways or not. Nah, I disagree. They don't often hang at that 18-week average the way this is suddenly doing. And momentum, which had been pointing down, is suddenly flattening itself out. Now, before I go into this chart, because now they get even more interesting, if you like what I'm doing here, do me a simple favor. The algorithms look at us, how we're getting played, how many likes we get, and so on. It costs you nothing to give that thumbs up for me. Okay, I'd appreciate it. Now, this is a downtrend chart. You've got lower highs, lower lows, and lots of levels of resistance from 33,448 to 33,661. It is oversold. You've got to get the numbers away from the 30 level in order for me to think the pros will come in and sell it aggressively. So get up there, and from where you're at right now, it's another 200 points. Actually, it's another 33,448. That's another 1,300 points. I'll take a look. I would think the market wouldn't be oversold if it gets up there, so I'll be looking at it hard with you during the week. In the NASDAQ, this has been where the strength is because it doesn't have banking stocks in it. But it's at the Bollinger Band. I know, don't be the guy that says this is the exception. It's going to keep running, Ira. Yeah, you'll be telling me that there as this happens to you. You'll be telling me that here as it happens to you again. You enjoy yourself. At the end of this video, I've got my ad up on the Bollinger Bands. Do yourself a favor. The course is inexpensive. It's slightly more than $100. You're going to really learn. You're going to learn how to work with these, at least my concept of how that works, and how I work with the slow stochastics, and it's a different formula than you're using, and I think when you tie them together, the light's going to go on. So I think professional money was coming out of this up here this week. In the Russell, I think the pros took money on the short positions when you hit the Bollinger Band, but they're not buying. They're covering shorts, in my opinion, down there. In the 30-year bond, this is where the pros at the upper band are taking some money off the table. And if you think about it, you came to the lower band area, now the upper. You see it even better in the 10-year. As you hit the band, you hit the low, you hit the top. Don't be the better. It's going to keep going one way or the other. Learn to take your money off the table and let the next guy carry the rest of the risk. The one time it goes, you will get hurt the other 9.5 times. Got it? Because 95% of the time it doesn't go. In the dollar index, bearish. I'm looking for a bit of support here at the 101.39. I'd like to see it actually rally back to that 18-week average and give us a cleaner pattern. I don't like this big move right here. Now, what that move set up, if you've taken the outside day course on our website, is this. Here's your outside day. If you take that out, you open the door up for all that. And that's just what occurred. Got it? That's what that is. Now, in the eurocurrency, I'm going to repeat. I think you get to the Bollinger Band, the first challenge of a 100-day average, bye-bye. You own it. I don't want to own it anymore. I am not saying it can't be bullish. I'm saying I'm not the guy that wants to own that there. The Canadian dollar remains bearish. Oversold, but in a downtrend, has hit its downside target, the Bollinger Band, and I think the smart money came out and they've got their hands up. What do I do with it? In the end, while you've had the market swing to the downside off the swing line, it did get underneath the 18-day average for a couple of weeks. That's bearish, not bullish. So now the rally up, if you can clear this 78.47 level, you got to 78.11, you really put these people in a quandary. Why is the yen getting bought so much? In fact, Bloomberg wrote me today and asked me to comment on it this coming Monday. And I'll save it for that because I'll be doing it on Bloomberg. In Bitcoin, higher high, lower low. Well, we'll see what just happens right through here. As I look at it, it did a great job. It's been a stellar performer during the banking crisis. But would I ever tell a client to buy a Bollinger Band? You can count on it. It's not going to happen. I'm also going to tell them not to sell it. The Brent WTI crude. So now the spread is narrowed in. Remember, at one time last summer, this got up to $11 difference. Now you're half of that at 573. And when you look at the markets, the Brent got down to a support level. Not bullish level, not a buy level, but a support of the Bollinger Band, the 200-day average. You take money off the table. That's what I teach on that. That does not mean I'm bullish, not in any manner. But if you had caught any of that move, that's what I'd be telling you. And Joe, you had your chance. This was your cover. Please do the wash sale. Sell it out of the SPR because you got to by the rules that are given out of Congress and buy it back with your own rules that you've got. Nothing leaves. Don't tell me you have storage problems. It's sitting in there already and it stays. You're not depleting it. What's wrong with that logic? Just give it to me because I don't understand it. In Rebob, you're just sitting here, and until you take out now the 237.95, I say that the pros are buying. They're nibbling here now, risking that. It's not necessarily for every person because it's about an $800 risk, but I think they're buying again. This keeps showing up. The resistance is the 100-week average. When you clear that, and eventually you will, you'll get that summer and spring and summer driving thing, you'll start your pop. So the psychology is going to be more important to me than the actual driving. Now there's a negative. If the market goes back through 237.95, that play is not on at that point in time. So I think it's on until that's taken out. So you put it together, you come up with a game plan, and that's what I'm here for, to help. I do it daily on my market research. I put it out in the morning in my subscriber videos that are out there for you. But you can learn so much of this on your own. It's actually easy. Take a look at this and give it a try. Take care. I'm Ira. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.